I made $10,000 in the past 2 days trading the exact same strategy on the NASDAQ. In this video, I'm going to go over exactly what my thought process was and exactly how I executed these 2 trades. So as I said, this was executed on the NASDAQ. To understand exactly why I took this position, I am going to explain and show you my pre-market game plan for Tuesday, okay? This is something I preach a lot, okay? On this channel, I try to really convince people to double down on data collection, journaling, pre-market journaling. All these simple things are things that people are avoiding. And the funny thing to me here is that people know the statistic of 99% of people who are failing in this industry, yet they are doing exactly what the rest of the people are doing. They're doing exactly what the 99% of people are doing. So how do you expect to be a part of the 1% if you were doing what the 99% are doing? What you have to do is double down on the stuff that those people are not doing, which is, for example, data collection, journaling, right? Journaling, pre-market game plans, all these different things I want you to double down on, which is why I put so much pressure on it and bring it up so much in my videos, because it's just so important. So my daily outlook here, as we can see on Tuesday, yesterday, I said I wanted to see a bounce below the 19,445.25 daily imbalance towards the 19,647 12-hour unmitigated imbalance. So this right here is the picture. This red line down here represents the daily imbalance that I'm referring to. This was a daily imbalance, meaning an inefficiency that the market hadn't yet hit. I wanted to see us hit that. And then I wanted that to take us towards the 12-hour gap that we had up here that was also unmitigated, meaning that we have not hit it yet. So this was the daily outlook, a sweep below here, and then a rally into the 12-hour imbalance up here. If we go ahead and take a look at NQ here, you will be able to see that on a daily time frame here. Let me just show you so it makes more sense. So this right here was the imbalance that I was referring to in my daily outlook yesterday, right? So this is the daily imbalance. As you can see, that's basically how we identify imbalances. We draw it from the bottom wick to the top wick like that, and that is our daily imbalance. This is what I wanted to see price hit yesterday. Now going into a 1-minute time frame here, and then go into Tuesday right here. So right here, we hit my annotated 19,447 level. And as soon as that was hit, we immediately saw a reaction. We call this displacement. It's basically when we have large volume in a certain direction. That's what I call displacement. So we hit my level here, and then I immediately saw displacement to the upside. Now remember, my whole plan for today, or Tuesday it was again to hit the equal highs or the 12-hour unmitigated imbalance, which we're going to mark out right here. There we go. So that was my entire target for this day. And again, also what I had written out in my pre-market journal. So as soon as I saw this displacement that we got here, a lot of volume after my key level being hit, I automatically assumed that I was right. And I had the confidence to start looking for long positions towards my buy side objective. I would never have had the confidence to execute a trade like this if I hadn't looked at it pre-market or if I hadn't imagined it pre-market. That's why I use a pre-market game plan. So what I look for with my strategy is I look for an expansion away from my key level. Now my key level again was 19,447 because it was an unmitigated imbalance. Now if we hit an unmitigated imbalance here, my anticipation is that we're going to go to the next unmitigated imbalance. So again, my key level, 19,447. All I'm waiting for after that's been hit is displacement, which I got here. Got displacement in the opposite direction. I'm waiting for a consolidation after displacement. Then I'm waiting for a small displacement leg away from that consolidation, which we get here. Then I'm waiting for yet another consolidation. And then I'm using that second consolidation and hoping that it goes to the optimal trade entry of the first consolidation. So again, I'm gonna draw it out here. Let me grab the Fibonacci extension tool. Then I draw the optimal trade entry from the most recent swing low of the first consolidation to the most recent swing high of the second consolidation. I always enter at the 61.8 zone, which is right here. And obviously my exit was my other key level. So again, let me explain it here again. I'm waiting for an expansion away from my key level, right? This is step number 1. Expansion away from key level. Then I'm waiting for a consolidation after the expansion. This is step number 2. Then I'm waiting for an expansion away from that first consolidation. This is step number 3. Then I'm waiting for yet another consolidation. This is step number 4. Then I'm using that consolidation as my entry, and only if it goes to the optimal trade entry, drawing it from the first consolidation's last swing low to the new consolidation swing high. So entry at 618, exit at whatever key level that you have. That is my trend continuation strategy in a nutshell. There's obviously a little bit more that could go into it. It's a little bit more discretionary than that, but that's the basis of it. That's exactly how I executed this first trade. Now let's jump to the second trade, which was executed the exact same way. So here we have the price action of today. I had one key level coming into the morning, which I have annotated right here. That's the white triangle that you're looking at. Now the reason why is because when I was on the charts this morning, I came to the charts at around 8:15. So utilizing this trading range, the middle point of that was right around here. This was around the middle point of this trading range, taking it from this high to this low. That's about the middle point of that, right? I used that consolidation, which we also call an order block, as a key level, anticipating it to move price lower. As you can see, that key level played out perfectly, and I also have that written in my pre-market journal, which also gave me the confidence yet again to execute this trade. I said I wanted to see lower prices today. I was a little confused, but if I had to prefer something, it would be to the short side to, again, hit the low that I was also targeting yesterday. Now, the reason why I wanted us to come down to that low yet again is because if we look at yesterday, which is right here, we barely wicked below that low. Now, this whole daily imbalance is something I look at as it needs to get filled, right? We call it an imbalance for a reason. It needs to get balanced. So by wicking like this, yeah, that can give a reaction, but price still has a reason to come back down there. So I wanted to see price dig a little deeper into that imbalance, and that's why I was short biased for today. I didn't take a trade off of this key level because I wanted the market to open before I started looking for any trades. The market opened right here at 9:30 with this candle. Now, something to note about the 9:30 opening bell. If the 9:30 opening bell shoots higher, for example, sweeps liquidity, and then immediately rallies lower, I look at that as manipulation. Okay, this was a manipulation in price action to stop out all the traders who went short pre-market here. Okay, so this move up was only made to take out the stop losses resting here and then continue in the direction which the market wanted to go in, which was obviously lower. Now, all I was waiting for here, after I got the displacement, because we'd already cleared the stop losses here, I'd already gotten the manipulation, right? So what I was really looking for was an expansion, just like yesterday. So I got the expansion here right after we took the stop losses here. After the expansion, what am I looking for? Based off of what I just told you, I'm looking for a consolidation, which I get right here, right? After that, I'm waiting for yet another expansion, which I got here. After that expansion, I'm waiting for another consolidation, which I got right here. All right. Now, doing the exact same thing as I did in the other trade, I draw it from this is just a short, the other one was a long. I draw it from the most recent swing high of that consolidation to the most recent swing low of the consolidation, right? Okay, so this was it. And again, I enter on the 61.8 level. So my entry was right here. My stop was a little bit below the high here, and my take profit was down here. So an absolutely beautiful executed trade, doing the exact same thing as I did yesterday, okay? A lot of traders will have trades that look completely different, right? You want to have a system where you can see that it's the same thing you're executing over and over again. That's how we refine our strategy. So literally using the exact same analogy or system as yesterday made me a bunch of profit today as well. This is this specific system works very well when you're able to identify where price is going before it goes there, right? So you're essentially trying to top tick or bottom tick the pullback of a trend, right? This is why this can give off such good risk to reward, because you are anticipating to catch the top of a pullback in a bearish market or the bottom of a pullback in a bullish market, which is exactly what I did in these previous 2 days. So just absolutely beautiful price action, called out to the absolute T with the entire team. I obviously gave outlooks to the team, and both of these trades were actually executed live in front of my members. So absolutely beautiful. I hope you learned something from this video and got a little bit more insight as to how I trade trending markets. I used to struggle a lot in markets that was very, very trending. I call them one-sided markets. When you have a market that is very, very one-sided with a very minimal pullback, which we obviously had here and we also had yesterday. Now, utilizing the system that I just told you, I am able to capitalize on these large moves in price, okay? So I recognized that I was not doing very well when the market was very one-sided. So I doubled down on it and I figured out a system that worked for me in one-sided markets, okay? As traders, I believe you need to have a big enough arsenal so that you can adapt to market conditions, because we're not always going to have conditions that are this one-sided. We're gonna have market that looks like this, right? Just like we're gonna have markets that look like this. So I need to have a strategy for this type of market, and I also need to have a strategy for this type of market. That's what I believe every trader should have. That's our job, right? We need to be able to adapt to market conditions, which is essentially what I've done here. Because half a year ago, 8 months ago, I was very, very horrible at trading these one-sided markets, but I was very good at trading the consolidating market, right? Now I'm still good at trading the consolidating markets, but I'm also getting very comfortable trading the one-sided markets because I recognized that this was a flaw in my trading that I had to double down on. So what I'm trying to tell you here is recognize your mistakes, double down on them, and figure out a way to fix those mistakes. That's your only job as a trader, okay? Thank you a lot for watching. I hope you enjoyed, and I will see you in my next video.